All right, let's take a quick look at the markets before we get some analysis. It was a good day for the oil share, you'll see in a moment. Almost a percentage point in the green, so a bit of a difference from earlier in the week. And a bounce back for miners and resources today. The likes of Anglo American up 4%, BHP and Sasol more than 2.5% up. On the commodities front, we've got oil back up again at $85 a barrel, but it seems to be hovering around that mark for some time now, 85.37. At market close today. And then a bad day for the rand, moving past 18 rand 20 at one point to the US dollar as the dollar strengthened. Well, let's get more insight and flesh into that. Martin Smith, portfolio manager at eNCA Capital, joins us. Martin, thanks indeed for your time. I mean, just overall at the end of the day, the JSE higher about a percentage point. I'm just wondering whether that was aligned with the globe. There were initial fears of inflation around, but I see now investors say there might not be such a hard landing with the world economy going down. And I don't know, did that bring in some sentiment globally?
No, I think it's a good question that everyone's asking. I mean, where are we going to end up from a global perspective? Recession, interest rates, inflation. And no one really seems to have any conviction at the moment. So you have the seesaw of sentiment. At the moment, it's a little negative in the States. I think investors are starting to get a little wary about that inflation or that interest rate kind of number staying a little longer or higher for longer, sorry, should I say. But I think what's held us up on the JSE side of things is the rand. Obviously, you spoke about at the beginning of the show, rand at 18.20 odd now. And that's obviously beneficial for some of our counters on the market. So that's what's keeping us afloat. But globally, you're seeing a little bit of negative kind of risk appetite returning as investors start to get a bit worried about what's happening from a recession and interest rate perspective. Yeah,
I mean, if you look at the rand, 18.20 today against the US dollar, those in the tourism sector and those exporting, well, good news for them because it's more currency coming in. But you kind of worry, especially with that inflation number out yesterday and food inflation skyrocketing. A weak rand at where it is, it's not the best thing to look at, is it?
No, you're 100% right. And specifically kind of where we are now from a higher interest rate perspective, it hurts kind of every person in terms of their kind of personal budgets and those things. So you hope that inflation comes off a lot quicker because growth is a real concern in South Africa, specifically with what we're seeing out of Eskom and rail and the like. So we are in a bit of a difficult position. So we need that to come down. Obviously, look, the rand is very volatile. I mean, we're at 16.50 odd at one stage at the beginning of the year. We're now at 18.20. The rand moves quite a lot. Last year, we moved 4 rand to the dollar throughout the course. So it is very volatile. But a lot of investors and financial houses are calling for a weaker dollar throughout the course of the year. So let's hopefully that kind of plays out.
Yeah, interesting share today. Vodacom, what is it, up 4%, leading the gains, in fact, on the JSE. Something between Vodafone in the UK and Vodacom. What's led to this share price increase today by 4%?
Sure. So, I mean, this is a company that grows 2 to 3% every year. Obviously, it's quite a difficult environment to grow materially in this space. I mean, think about your phone bill. It hasn't really gone up materially over the years. But what's happened is Vodafone owns 65% of Vodacom, and there has now been talks that they're going to look to do something or explore options with that stake. So people are speculating on the fact that that's going to be sold at a higher price than obviously what it's trading at yesterday. And obviously, on the JSE, if you go above 35% ownership, you've got to make a mandatory offer to the rest of the shareholders. So people are speculating that there'll be essentially a higher share offer kind of coming around the corner. Look, I don't think it'll happen tomorrow if it does happen. And again, it's all up in the air. But I think that's what's driving the share price, is that there'll be an offer and it'll be higher than what it is at the moment.
And then finally, Martin, before I let you go, I mean, we've been looking at some of the miners giving us trading updates of late. I see South 32, diversified miner, they're halving their dividend. And it's interesting to look at the miners because, you know, directly affected by port issues, directly affected by power cut issues. But what do you make of that trading statement from this diversified miner, South 32?
I thought it was a decent update. I think market agrees with that. You saw the share up quite nicely. I think the things that the market liked is cutting of costs and volume growth coming through. This is a share that we've liked for a long time, but it has also run incredibly hard. I think it's done the best out of all the miners in the last 12 months or so. Long term, I still like the mix of assets or commodities that you get in this business. I think it's still in a good place. They're operating well, and depending on what your view is, you might look to take profits because, again, it's run very hard. But again, decent set of numbers, good mix of assets, and I like the share on a long-term basis.
Martin Smith from eNCA Capital, thanks very much indeed for talking to us.